Hello, friends. Welcome to the paid subscription of Financial Independence Services. First of all, let me thank you for choosing us as your financial advisor. I, Ankit Chaudhary, co-founder of Financial Independence Services, welcome you to this video. Guys, this is a very important video. If you want to have a long-term beneficial, mutually beneficial relationship with us, this video is very important. We would be talking about rules of how to trade, what's the mindset which is required to trade with us on our calls, and the importance of stop loss, importance of discipline, and some key terms which you would be reading it daily, and you have to trade according to those. So all this would be shared in this video. So it's a very important video. And since we have multiple packs, we have equity, intraday equity pack, we have options pack, we have intraday futures, we have BTST pack. So whichever pack you have taken, do watch that segment very carefully. And at the end of the video, I would be summarizing the video along with some very key terms that we usually use while trading. So let me start first with the equity pack. So this is for those who have taken intraday equity pack with us. So the capital required for this pack is around minimum is 50,000. So in this we get a leverage of around 4 to 5x. So for example, if we buy a stock worth rupees 1,000, then we can take 200 quantity of that stock by using just 40 to 50,000 margin. I would show you how we do trading in Zerodha. So I would also show you the calls, how we give call and how we can execute that. So this is today's call. For example, we said buy Vedanta only above 344. So this is the message you would be getting on your Telegram paid channel, that you have to buy Vedanta when it crosses 344. So what we have to do first is we would just open the calculator. What we would do is initially what we suggest is that you should take 2 lakh value of shares for each trade for intraday equity pack, right? So this is 2 lakh divided by the share price, which is 344. So what we are asking is, initially when you start, you have to take around 581 to 582 quantity of Vedanta when it crosses 344. So what we would do is we would type in Vedanta, we would click on buy, then we would click on NSE, we would click on intraday here, and then we would put in 581 quantity, right? And then we would click on SLM, and we want you to buy the share when it crosses 344. So here we would mention 344.05, right? So if you look at it, this requires just a margin of 40,000. So with 40,000 of capital, you can buy 581 shares of Vedanta, which is worth rupees 2 lakhs for intraday, right? And then we would click on buy. And when Vedanta price would cross 344, this order would be executed. After that, when Vedanta, so usually these trades are for 1% of a margin. So the stop loss would be 1% and the first target would be 1%, wherein you could book around 70 to 80% of the quantity, and for the rest you have to trail stop loss at cost. By what do I mean by saying trail stop loss at cost? You have to move your stop loss at cost. So the initial call would be buy Vedanta above 344, which I am showing how we executed. We would just click on buy here, and if the market is open, this would get executed when it crosses 344. And then we would say that stop loss of Vedanta is 341.40. So what you have to do is you have to click on exit in your open position, then click on SLM and put in 341.20 or 341 there. So what we suggest is we suggest a random stop loss here. So what is a random stop loss? It's mentioned in this PPT, but I would just give you a brief because it's very important. So what does an operator do? If he sees that a bigger quantity is is put on a specific level, it tries and hunt it down. So as you know, we have many subscribers. There would be around 50 to 100 subscribers in each pack. So if we say put a stop loss of Vedanta at 341.40, right? If all of you would put that stop loss in the system, there would be a huge quantity which would be, visible to the operator. So that's why we suggest that you need to put a random stop loss of 0.1 to 0.2%. So by 0.1 to 0.2%, I mean that 10, 20, 30 paisa difference you can take in if it's a, 340 rupees share. If it's a bigger share like Reliance, you can take a difference of around 2 to 4 rupees. So 0.1 to 0.2% is a random stop loss that we ask you to place, so that the operator does not hunt the stop loss down. So that this is a very important term, guys. If you don't get it, do ping at the rate FIS trade underscore admin, and he would explain it to you, right? So then we, at the first target, we book around 70 to 80% of the target, and then again we book further if the stock price rises further, or we have placed stop loss at cost. We trail stop loss at cost. So the idea behind this is that once we are in very good profit in a particular call, we would never take loss. So if you are aggressive, you might not book at first target. You might try to, maximize the gain, but you have to trail the stop loss, means move the stop loss to cost so that you don't make losses. So this was the first call that we gave today. Then second was Bajaj Auto. So if we look at Bajaj Auto, I would just show you how do we buy a Bajaj Auto. We have to put in Bajaj Auto, then click on buy. So here is intraday. Then we have to put, what we would do is we would open calculator. So 2 lakh divided by 3,600, right? So what is the quantity? 55 shares. We would put in 55 shares. We would put in SLM, and we would put in 3600.1, right? So whenever it crosses that price, 36.10 paisa, this order should be executed. So this also requires around 39,800 of margin. Just click on buy and the trade would be executed. And we asked you to book at 3650. At 3650, you just have to click on exit, click on market, or put a limit order of 3650, and the trade would be executed. Simple, guys. So that is how we trade during intraday. Now, for what we do for a sell order, there is, like, for example, we give this call also, sell BPCL only below 376. This did not get activated, but still I would show you that how do we place order for it. So what we have to do is we have to click on sell here, right? Sell means you are shorting that stock, and if it falls, you would make profit, and if it increases, you would make losses, right? So what we would do here again is we would open calculator again, put it 2 lakh divided by 376. What's the quantity? 531. So we would put in 531 here. SLM is there, and we would put in a price of 375.95. So what we are saying is, if it goes below 376, we would sell this stock. So this will also require around 40,000 of margin, and we will click on sell. So once this trade is executed, if it falls further, we would click on exit and click on market, and the order would be executed and we would be booking profit. One thing is very important, guys, that you have to be consistent in your quantities. So if you are buying 2 lakh worth of shares of Vedanta, you should buy similar value of shares for Bajaj Auto and similar value of shares for BPCL also. So what do some people do is that they buy shares worth rupees 1 lakh for the first call, then they keep on increasing quantity. So on a particular day, you have to keep the value of the stock similar. So if you are trading with 2 lakhs of value of shares, trade with 2 lakhs. If you are aggressive, you can trade with 4 lakhs, you can trade with 6 lakhs intraday value, but do increase your volumes when you are comfortable trading with, right? So this is about equity calls. And one more thing that I missed telling you is that what we say is, sometimes we say keep Bajaj Auto on radar. So when we say radar, you just have to add it to the watch list. And sometimes we say buy Bajaj Auto at CMP. If we say buy Bajaj Auto at CMP, it means you have to buy it. Buy it at current market price. So what you have to do is click on Bajaj Auto, put the quantity and click on market order and just buy that. So now let's move on to the future calls. So guys, futures are riskier than intraday equity pack calls. So there is a standard stop loss that we use for every call that we do. The standard stop loss would be around 6 to 7K loss. So what I am trying to say here is that if you buy a stock future, the maximum loss you should take in one call is 6 to 7,000. So market is supreme, guys. What we have to do is we have to, manage our losses. We have to follow the process and profits will follow, right? So I would show you how this works. So for examples, here we said buy Hero Motors futures at CMP. This was a very good call that we gave today. It fetched around 17,000 profit per lot. So what we did was, if you want to buy Hero Motor futures, what we would do is we would mention here Hero. Here the quantity is standard, guys. So Hero Motor futures, everyone knows that this is for one lot is for 300 quantity. So when I say buy Hero Motor futures at CMP, what you have to do is click on buy, quantity is here, click on market and buy it. Simple. And you are in the trade. And then we would be sharing the stop loss which would be of 6 to 7K. Just put that stop loss in the system. Do remember that stop loss has to be put in the system, not in your mind, right? So that we could minimize the losses. So here we bought Hero at around 2681 and it went, and then we asked conservative traders to book at 2697 or trail stop loss at cost. But by what do I mean by saying trail stop loss at cost? That you should move the stop loss to your cost, which is around 2681. So the logic behind here is that if you are in a good trade and it has shown you profit, you should never end up making losses in that trade. So moving the stop loss to your cost is very, very important, right? So this is one. Then we gave another call, which is Bajaj Auto futures above 3606. So what we have to do here is we would go on Bajaj Auto FIB futures, click on buy. This is intraday, right? We would click on this and we would put in 3606.1. Remember what I am doing is I am putting 3606.1. So when the price crosses 3606, your trade should be executed. Fine. So this is how we trade for the future segment. Let me look if I have missed something. This is the presentation for futures. So guys, do ensure that you get this PPT from the admin. If he has not shared with you, you can just ask for the PPT. And all these 4 rules are very, very important, right? And here also in future segment also, we would advise you to put in random stop loss. Random stop loss is very, very important. So see, if we have around 100, subscribers for the future segment, and we ask you to put a stop loss of 2669 on for Hero futures, right? If all of you put in the stop loss at a similar price, there would be around 80 to 90, 100 lots which are there at same price, which is visible to the operator. So what the operator would do is he would hunt that target down, means hunt that stop loss. The share price would go down to 2669 and then it would go up again. So to avoid this situation, what we say is that keep a bit of a buffer, right? Like 0.1 to 0.2%, wherein so there would be some people who would be placing stop loss at 2668. There would be someone who would be placing at 2665. So the quantity, would get divided and it would be not visible to the operator. So we would save there on, our stop loss would not get hunt. So that's why we say random stop loss is very, very important. And one more thing, guys, do trade in all calls. So see, as I said, market is supreme. So there would be days when a stop loss gets hit. So what happens is you as a subscriber wait for a couple of calls to work and then you enter in the 4th one. So what we say is that trade in all calls and trade with happy stop loss. Your loss should be such that should be manageable in another trade. So you don't have to be aggressive. For example, you have just taken the subscription. You say, yes, we have a very good, I have just taken the subscription and I would trade aggressive. And in the first call itself, you go for 3-4 lots, and that stop loss gets hit and you stop trading. So what we would suggest is take it slow and steady. Take one lot initially. Once you are comfortable and are in good profit, then increase volumes. So always manage your losses. And then this is the BTST call that we gave today, which is LTTS. So we gave sell LTTS only below 4602. I would again show you that how we have to trade this. I would put in LTTS Feb futures. I would click on sell. It's a 200 share lot. I would put in 4601.9, and here I would click on overnight positions, right? So the margin requires increases to 2.441 lakhs. So I would click on sell. This is an SLM model. When it goes down, this is sell. We would sell this way. For BTST and STBT, guys, there is one very important thing which I would like to share with you is, usually what we do is we share BTST, STBT around after 3 p.m. and we book it early morning between 9:15 to 9:20 a.m. There is a very important thing that we use while getting these BTST and STBT book. We look at day open, day high, and day open, day low. So I would show you. For example, yesterday we had given SBI futures as BTST, right? So just let me. So if you look at it, so day open, day low was similar for SBI cash levels. So what we did was we asked our subscribers to wait for a bit and then see open low is similar. If this happens, you can wait in this trade till this open low is broken, or you get a message from RA. And so what do we mean is, it's a simple logic, guys, that if the open price and the day open and day low is similar, it means that there are more buyers in this stock. So what we do is we wait, we hold the position so that we could make bigger gains. So, and similarly, if it's a sell position, day open, day high, we can hold the stock if it's day open, day high. It means that we are in a short position and there are more sellers in this stock because it is not able to cross its day high. So we can hold that position. And similarly, if you are in a buy position and there is day open and day high, it means you have to exit the position immediately. Guys, hope you got this point. Let me move on to the other points. So this is, we have discussed about LTTS. Here we booked LTTS at 4585 and trailed stop loss at cost. So naturally the stop loss will move to cost. Now let me talk about options. So guys, in options, usually what we do is we give couple of stock index option calls and couple of stock option calls. In index option calls, standard rule is that we go for 3 lots of Nifty and 2 lots of Bank Nifty options, right? So for example, I would show you, this is today's call. So initially we wrote keep Reliance 2400C on radar. Guys, please do remember that when we say radar, we just want you to add the stock in your watch list. We don't want you to take any trade when we say on radar, right? Because why we give radar is so that it's added in your watch list and you could take instant action. But that stock is still under evaluation by our team. So radar is not a buy recommendation or a sell recommendation. You just have to add in the watch list. So today's call was buy Nifty 770p 10th Feb at 173. So what we would do is we would come here, we would put it Nifty we would click on buy. Herein we would do intraday because it's an intraday trade. We would put in 150 as quantity. We would put in market and we would put in buy. So guys, this is simple. We would click on buy and the trade would be executed. So for taking 3 lots, the margin required is just 45,000. And then we bought it at around 173. Then we asked you to book at 188 or trail stop loss at 175. So you can book couple of lots at 188, and for the last one, you can move the stop loss to 175. So you're not in loss. You bought it at 173 and now you have moved the stop loss to 175. So there is no way that you are losing money in this trade. And quantity you can adjust according to your risk appetite. But always remember that happy stop loss is the term that we use, that it should not cause any trauma or any friction in your day-to-day life. Trading, we have to do in a very, simplified manner, wherein we do it. It should not cause any stress to you, or you should not get even excited. So as we say, if you go to a casino, there, if you go to the casino, there is a dealer which shows no emotions. Either you win or you lose. There is no emotion on the dealer's face. So we have to be as calm and composed as a casino dealer, right? So never get excited on making bigger gains, and never, feel disheartened when you make some losses, because profit and loss are two sides of a coin while trading. So a emotionally stable mind would always make more money than a, less emotionally stable and excited mind. So one has to be very calm and composed while taking all the trades. Then we gave around SBI CE on radar, then Bharti CE on radar, but we never took those trades because those levels never reached. So usually we trade breakouts and breakdowns. So if the level does not cross, we do not give that trade, right? For stock options, you have to take one lot. For index options, you can take 3 lots. This is the standard. And let me see. Yeah. And one more very important point. When we say buy this at this price, you can only, take a difference of 400, 500 rupees. For example, if we say buy Nifty PE at 173 and you open the trade and the price is 178, you just have to ignore that trade. There are multiple trades that we give, and in case you are late in executing any trade, just ignore that trade. There is no worry, you would get another trade. You have taken a 1-month subscription or a quarterly subscription or an yearly subscription. So there is no hurry. If you have missed the trade, just ignore that. So there is a standard rule. What we follow is that you should take around 500 rupees, within 500 rupees range. So if it's an index option, 3 to maximum 4 rupees range could be taken. So for example, if we gave it at 173, you should buy it till 176. If you see the price is 177, 178, just ignore that. And if you get lesser price, means we gave it at 173 and you are getting it at 165, 170, do go for it. Okay, guys. So this is because prices are dynamic in nature. What we do is we see the price, we give that price. But by the time you read that price, you take action, the price might change. So that dynamic nature we have to, account for. So this was our today's performance, guys. Our clients made around 62,000. Excuse me. Hero made in Hero we made good gains around 17,000. Vedanta was good. There were certain stop losses in CUB futures and this Jindal and Gale. So this is how we trade. This performance report is shared daily, whether we make losses or profit. This would be shared, and this is as per 1 lot in futures, 2 lakhs value for intraday equity cash, and 1 lot in stock options, and 3 lots in index option. So this is the standard template that we use. If you are aggressive, you can increase your quantities. If you are conservative, you can decrease your quantity in intraday cash. For beginners, I would always suggest that you should take intraday equity calls only. And once you are comfortable, then you have to move to FNO. Do keep in mind, trading in market is subject to market risk. There would be profits also. There would be losses also. No one can provide you short calls. Everything is based on probability, right? So you have to keep this in mind, and do have trust and leap of faith. If you have subscribed with us, there would be days when we would make losses, but don't worry, we would cover them. So you have to trade in all calls. It's not like that if you make loss in one call, you stop trading. If you have made loss in one call, you have to just follow the process. If you follow all the rules, the process, we would be in good gains. So let me summarize this video. So one is random stop loss. This has been explained by me a couple of times. random stop loss. We don't want our stop loss to be 100. So what we do is we keep a buffer of 0.1 to 0.2% in all our calls. Second is trailing stop loss. What we do is when we are in good gains, we never want to give it back to the market. What we do is we move the stop loss to cost. And even if the stock price goes further, we keep on moving our stop loss upwards so that the gains are enhanced and we can maximize our gains. Buy above or sell below levels. I have clearly shown how we buy above a particular price and how we sell below a particular price. So whenever we do this, we have to put in, if we say buy above 344, we have to put in 344.05, so that if the level is crossed, then only we buy. If the level is just kissed, our trade should not get executed. Keep on radar means you just have to add it in the watch list, never take a trade according to it. Follow all calls with strict stop losses, self-explanatory. Discipline is very important, guys. If you follow all these rules religiously, I ensure you that you would be in good gains. So what we have to do is we just have to follow the process and profits would follow. Then happy stop loss is very, very important. It should not be like this. Usually the option traders do so that if I have 40,000 or 50,000 in my account, I would take all the, I would put in all the money in a single trade. So you have to trade as per your capital, as per your risk appetite, how much risk you can take, and the returns would be similar. So if you are aggressive, you can take higher risk, go for it. But do remember that if the trade goes sideways, you should not feel disheartened or disappointed. So it's a process which we need to follow. If you have any doubts, just message us at the rate FIS trade underscore admin. What I have seen in my last 4 years, clients who are who communicate with us, who have the willingness to learn, who have the passion to follow the channel, do much better than clients who remain silent and get disheartened with one or two trades which go bad. So if you are feeling low, FIS trade under admin is the button. Just click on it, talk to Aman, and we would solve all your issues, right? So a good communication is very important for building a long-term sustainable relationship. Okay, guys. Thank you. Thank you. Happy trading. Hope you liked our video and do share your feedbacks with us at the rate FIS trade underscore admin. Thank you.